All right, amazing. So I said you can learn how to calculate your stop loss, your take profit. Just watch this video, how to calculate lot size, stop loss, and the likes, right? This particular video is very important. Then this particular one also, how to become a profitable trader. Watch it. Then today, after this class, I'm going to let out this video, cohort 1. I'll just change it to public. I don't know if she's done editing what she wanted to edit, so I'll just make it public so that everybody can work with it. Basically. Oh, Father, let us pray. Our Father, we bless you. We thank you because we are greatly helped today. Lord, we are here to learn. Teach us, help us, oh Father. Help us, Jesus, help us. In Jesus' name we pray. Amen. Okay, so Market Mastery Program. And yesterday we discussed Beginner's Guide to Trading, which is what is trading, financial instruments, trading time zones, correlated pairs, exchange rates. We talked about exchange rate measurement, which is pips. And we talked about lot size. Then we didn't talk about current market price. Why? Because I wanted to show you, I don't want to talk about it. I want to show you what it's about. And I'm sorry again for the poor quality of today's video. I'm using my Windows to show my video. I'm not using the laptop, and my phone is very low. I've used my phone, so I'm so sorry. It's actually charging now, and that's what I'm using for the hotspot and everything. So I don't know. Sincere apologies. Okay, sincere apologies. There has not been light this morning, and then I have like 2 very good power banks, like heavy power banks, but like they're dead. So sorry about that. Okay. Basically that's it. It's apologies. So now we're going to continue from current market price, then calculating peak value, trading multiple lots. Then we'll go straight to Metatrader 4 basics. I believe everybody have downloaded a Metatrader 4 application on their phone or your laptop, depending. I advise your phone because it's quite easier to navigate, whether Android or iPhone. It doesn't matter. We'll do everything together here and now. Okay. Then account margin we'll discuss. Buying and selling the exchange rates, we'll discuss. Price spread, we'll discuss. Market execution, we'll discuss. Stop orders, limit orders, stop loss, take profit orders, we'll discuss all of those. We'll also discuss trading view setup, charting tools, using Fibonacci, indicators, that's your moving average, average range, RSI, stochastic, all of those stuff. Even though I don't really use them, right? But we'll discuss. I think they might be useful for you since you're still like, you're just coming up. When I started, I used all of those things, but now my chart is clean. Like there's no indicator on my chart. There's no single indicator on my chart. But it's important to use indicators because, mind you, it's leverage. Okay, so it helps you calculate what you might have not seen earlier. I don't know if you get what I mean. Okay, I'm actually so passionate about this class because everybody's gonna learn. Everybody's gonna learn, get better. That's what matters, So as we go through the class, please, when you see that there's a need to take a screenshot of anything, please take a screenshot. Whatever you think there's a need to take a screenshot, please take a screenshot. And don't be afraid. I'm not more selling the course. And I plan to sell each class that you miss for $100, but I'm not going to sell it. I'll give it for free on my YouTube. I just felt like, right? So please ensure you go through those videos. And this is Mastery. Mastery is watching it more than 5 times. So you can get, or you can gain mastery when you watch it once, twice, 3, 4, 5. Ask my team members, those that are my personal mentors, I tell them watch it at least 21 times. Those that know me. Any video I want to understand, I'll watch the video at least 21 times. All right. So I plan to sell each of the courses, like I said earlier, but we're going to get it for free. What you can do to yourself, is to watch it at least. Is YouTube is free. Are you paying to watch YouTube? No, right, bro? So watch it. Watch it at least. I'd advise. Watch it at least 7 to 10 times at least. Like one video. I know it might be long, but mind you, you're not paying to watch it. So why not watch it? Like, why not watch it? That's the real thing, right? Why not watch it? You're not paying to watch it. So let's just go straight into what we have for today. I feel so pumped up. I feel so pumped up. Where did we stop? We have gone through all of these stuff yesterday. We stopped at, okay, we are going to start. This was where we stopped yesterday, right? Okay. We stopped at lot size and units yesterday. So today we start from trading time zones. I didn't add it in the course module, but this is something very important that I believe everybody needs to get a grasp of. So that's trading time zones and then trading time zones and the pairs that you should trade. So essentially, opportunities lies where there is big movement in the market. All right. So where there is big movement, I'm talking about breaking news or major trend getting strength, or like all of these drivers, they emerge during specific or specific country/currency daytime. Okay. So is this during the day? Like, is there any heavy news that comes out in Nigeria in the night? Okay, Nigeria is dark. Okay, Nigeria is good. But basically, like major news, they all come out during the day, right? So it's during their day you want to be trading their currency, not when they are asleep. Like, bro, they are asleep. So there's nobody that's going to do anything much with that currency at the time. Sorry, hold on. I need to plug this. It's low, 20%. Hold on, please. All right, great. So we can proceed. The New York session starts at 12 noon and ends at 9 p.m. their time. I'm sorry, UTC. UTC is like, I don't know the full pronunciation, but I think it's like the general standard time. I don't know, but okay, let's check it together. Let's not be in the dark. You know, UTC. UTC is what's the name? Universal Coordinated Time. Okay. So that's like the coordinated universal time. Okay, I know that is something general because I hear people say it a lot, but I've not really had time to like go through it. Okay, so universal coordinated time. All right. So 12 noon in our time. That is, let's convert UTC to Nigerian time. UTC what? Okay, 8 p.m. UTC is 9 p.m. what? So when they say 12 noon their time, they're talking about 1 p.m. our time. I don't know if you get what I'm saying. So 1 p.m. our time is when New York session opens. That's why most times there's news at 1:30 p.m. You have not asked yourself why they, okay, forex traders, you have not asked yourself why there's forex news at 1:30 p.m. That's because the market is open, all right? And they bring out the news in the morning so that things can move. I don't know if you get. Therefore, the best pair to trade during the New York session is any currency pair with the US. Excuse me, with the US dollar in it. Any currency pair that has the US dollar in it is the best currency pair to trade during the New York session. Okay, so the same goes for Euro, GBP, and CHF. We already told you yesterday what each of those currency pairs stands for. So CHF is Swiss franc. And I told you why it is Swiss franc, right? So these are the best currency pairs to trade during the London session. So London session is the course across countries in the United Kingdom, England, I don't know, you get what I mean, basically, right? So if you are a night owl, sorry to use that word, but if you are like a night scroller and you're just too busy to trade during the New York session time, you may seek the best currency pair to trade at night. So in night our time, best currency pair is the same time with Sydney and Tokyo. So Sydney session, Australian dollar, New Zealand dollar, they're good to trade during that time, right? That's why before in the midnight, like 3 a.m., you find me trading AUD USD. That was my best pair to trade at 3 a.m. Why? Because he moves well, even to now, but I don't, no, I don't do all of this again. But when I was just starting out in trading, the JPY, that's Japanese yen, okay? That's I call it Asian session because it goes across Sydney and Tokyo. So to me, Asian session starts like I would say 9 p.m. if you would ask me. Even though Sydney starts 9 p.m. our time, and 11 p.m. Tokyo session starts. But to me, both of them are Asian, so I call both of them Asian session from 9 p.m. to 7 a.m. All right. So it's CD will end by 5 a.m. Tokyo will end by 7 a.m. But me, I'll just call it to 7 a.m. That's what I do, bro. So depending on where you stay, and depending on your time, like your time schedule, pick currency pairs that are usually available at the time you're trading. Do you understand? Are available at the time you're trading. So if you're looking to catch the price movement, here is like a table for the best time to trade specific currency pairs. So the Asian session, the best time to trade it is 9 p.m. to 8 a.m. Okay, 9 p.m. to 8 a.m. And that is like 10 p.m. to that Asian plus Pacific. Excuse me. That's like 10 p.m. to, like I said earlier, 10 p.m. right? So that's like 10 p.m. to, let's say, 9 a.m. if you would ask me. Okay, and pairs that contain that is JPY, the Aussie dollar, that's AUD, the New Zealand dollar, right? So example of those pairs are like USD JPY, AUD JPY, USD JPY, GBP JPY. I love those ones in the midnight. So they move well, especially because the JPY. Any pair that has JPY in it, to move well in the midnight. To move well in the midnight. Okay, so Euro AUD, they're good to trade in that time. London session starts at 8 a.m. our time, 7 a.m. their time. So 8 a.m. our time to like 5 p.m. So it's good to trade the London session. Right now, the London session is still open. But remember what I said, don't just depend on one session, like pick correlations of 2 or more sessions. So actually, you can't get 2 or more sessions. You can only get 2 sessions overlapping. So when 2 sessions are overlapping, it's best to trade at that time. Why? Because of high volatility in the markets. People run away from volatility because, okay, they feel that's so volatile. But bro, that's where there is money. There is money in volatility. If you want the most money, then you're going to get into the most volatile currency and the most volatile market, which is the forex market. Okay, so the forex market can like turn your entire finances forever because of the high volatility in the space, because of how highly volatile the market is. Okay, so the New York session starts at 1 p.m. our time. That's 12 noon till about 10 p.m. US dollar, Canadian dollar, gold. Yeah, those that know me know I trade gold too, right? So gold, XAUUSD is crazy, bro. Like, Jesus, it's so volatile. And same way you can lose a lot of money, same way you can make a lot of money, right? If you're depending on what part of the of the balance or the wheel you are on. So current market price, let's go to current market price. So the CMP of any base or cross currency pair is less than or equal to 4 digits after the decimal point. 4 digits after the decimal point. Sorry, hold on. Yeah, so I'm going to draw you a table. After explaining this, I'm going to draw you a table. I don't know if I drew the table already. Okay, I didn't. So I'm going to draw the table after doing this. Just I won't forget. So for example, let's say Euro USD exchange rate is 1.212, okay, 1.12121, right? 4 digits after the decimal point is the current market price. That's 1.1212. Any other thing after it, bro, ignore it. Do you understand? Any other thing after it, you can freely ignore it. By the way, please write I am in if you are on this call, on the WhatsApp group. Okay, so just type I am in or I'm in the class. I don't know, just type something, right? Just write I am in or I'm in the class. Though the PA is actually here, she's here with everybody monitoring, but you write it. Maybe she should use that as double assessment. Remember, every single activity you're doing is being assessed. I'm honest with you. You know, I'm not the only one on that group. I'm not the only like head on the group. I hope you know. Like the broker we're working with, okay? There are very good things we have in store for you guys, honestly. So those that are going to view this on YouTube later on, right? I'm going to drop the link to the broker in the description. So what you want to do is to really sign up. We have plenty things in store, plenty plans we want to do. especially for people that don't have so much money. We have a lot of plans, okay? But we can't do all of these things if you yourself are not going to be committed to the process, okay? But let's move on. Any number at 5 digits after the decimal point is called a pipette, okay? Remember, we have pip, we have pipettes. So pip is 100 points. 1 pip is 100 points. Okay, 1 pip is plus or minus 100 points of the current market price, not of the exchange rate. Let me explain what I mean. Okay, class MMP cohort 1. So the exchange rate of Euro USD is, let's assume 1.12121. Like I said, current market price CMP is 1.1212. A pip is plus or minus 100 points. 100 is like from the back, right? 1, 2, 3. So if you minus 100 from this figure, you have 1.12, sorry, 1112. And that is 10 pip below. So we have just removed 10 pip. Do you understand? So now we have minus 10 pips. 1.1212 minus 10 pips. This is the figure. So we minus 10 pips. Okay, so what 1.1212 plus 10 pips is going to be 1.1312. If we are picking it all of this number together, we're going to make a mistake. We're going to be adding, we're going to be removing 0 from the pip mistakenly. What do I mean? If we are picking 100 points, so 1.12121. We forgot to remove this last one. Oh, let's assume. So we now added 100. So we have 1.1222. In your mind now, 221. In your mind now, you have added 10 pips. Bro, you just added only 1 pip. Only 1 pip. Finish. You added only 1 pip. Why? You did not count 4 digits after the decimal place. So we have 1, 2, 3, 4. Sorry. Oh boy. What I'm doing, Jesus. Jesus. All right, so are we together? Sorry about that distraction. So if we did not count 4 decimal places after 4 numbers after the decimal place and remove that last one, yeah, you're going to be adding 1 pip instead of 10 pips. All right. So that's why it's important to pay attention to what I'm saying now. So but if it's for JPY pairs now, JPY pairs is different. JPY pairs, the CMP of any JPY pair is less than or equal to 2 digits after the decimal point. Any JPY pair at all. So all JPY pairs, their own number is usually like, let's say 117 points. JPY is almost as weak as the Naira, honestly, but it's not. JPY is almost as weak as the Naira, but it's not weak like the Naira. Maybe that's the Naira is not even in the place. I don't know. JPY is almost as weak as the Naira because 1 USD is like 120 Japanese yen. 1 US dollar is like 600 Naira, right? So JPY has 3 digits also. So 117 point, let's say 522. All right. So if you don't remove this last number, or if you remove this last number, you have 117.52, and this is the current market price. All right. I'm not telling you that now. I'm telling you when you look at the charts, that will be the current market price at the time when you look at the chart. Okay. So if you forget to remove this one, you forget to remove this one, and you're now adding 1 pip to JPY, you're going to be adding. If you forget to remove this one, you're adding 10 pip. You have mistakenly added only 1 pips. Only 1 pip instead of 10 pips, okay? Because you forgot to remove this last one. So you just made a big mistake, honestly, like a big mistake. So if your stop loss is 10 pips, and you're not gonna do it without putting this into place, bro. Just made a stop loss of 1 pip. A market will smash it anyhow. Why? 1 pip is just 1 pip, bro. Who does 1 pip stop loss? I don't know, like who does 1 pip stop loss? All right. So any number 3 digits after the decimal place is called pipette. Any number 3 digits after is called a pipette. Okay. Then the next is calculating pip value. So lot size determines the value of each pip of price movement, whether a gain or a loss. So while the exact value must be calculated based upon each financial instrument, the following example can give you an idea, of the relative change in value per pip based upon different lot sizes. Okay? Based upon different lot sizes. Example, 1.0 standard lot of Euro USD would have an approximate US dollar value of $10 per 1 pip movement of the exchange rate. All right. So per standard lot, let's say you are using 1 standard or 2 standard or 3 standard or 4 standard, you're going to be getting an extra $10 per pip. So if you use 2 standard, 1 pip means you're going to get $2 profit or loss. All right. 2 pip, you're going to get $30 profit. And please tell me the class is coming. Sorry, hold on. I'm back. Sorry about that. Okay. You know, like you said, family first. So sorry. There will be per pip. So if you use 3 standard lots, per 1 pip market moves, you're going to have a profit or a loss of $30. If you use a mini lot 0.10, you're going to have a profit or loss of $1 per pip. And I told you how a pip is calculated. 100 points from 100 points after the decimal place of your current market price. Okay, it has to be your current, it has to be your current market price, because you can't use the exchange rate itself without converting your exchange rate to your current market price. I don't know, does that make any sense, please? All right. So per micro lot 0.01, if you have $100 account, I don't know why you're going to be going for a mini lot size. $100 account means if market goes 100 pips against you, which is possible. If it goes 100 pips against you, you have lost your entire $100, because it's $1 per pip. So if you have $100 account, proper risk management, use between 0.01 to 0.05 per trade. Okay, and your stop loss should be reasonable, bro, right? This means if market price on Euro USD moves from 0.020 to 0.220, we have 2 pip movement, and we have made a profit or loss of $20 using 1 standard lot size. Profit or loss, depending on whether we bought or we sold. Okay. Now trading multiple lots. Okay, so trading multiple lots can trading multiple lots simply changes the value per pip of price movement. That's what I was explaining earlier. Okay, so 1.0 lot size will give you $10 profit or loss per pip movement. 5.0 lot size, talk to me in the chat box. It's going to give you $50. Oh, I already said it. $50 profit or loss. So let's say 30.0 lot size. 30.0 lot size will give us how many dollars profit or loss? Talk to me in the chat. How many dollars profit or loss? 30.0 lot size. $300 profit or loss. Makes sense. Great. Judah Ayaba, you were the first person that I saw. So please send a message to the course advisor that you answer the question first. Okay, so I think, I'm not sure, I think she has a gift for you. I think. If price moves by 10 pips, we have made, oh, Judah even missed it too. Judah missed it too. I said 1 pip on 30.0 lot size is 30. I saw 30 there now. Thank you. 30. The first person to say 30. So Judah is not you, sorry. Let me go to the chat and see who first said 30. Shows. Is that Shola Olushola Adeiza? I don't think, because I know she usually put her full name. Shows. Oh, you are the one, no? Ah, you have changed it from Olushola Adeiza to Shows. Go pocket. All right. So please send a message to the course advisor that you answer the question. I think she has a gift for you. Okay. So if it's 10 pips, then $300 is correct. But 1 pip is only $30 profit or loss. Okay. Thank you so much, Shola, for bringing us to that. So 1.0 lot size, like I said, is $1 profit or loss. Then 10 pips will be $10 profit or loss. So 30.0 will be $30 profit or loss. Then 10 pips will be $300 profit or loss. So here are a few examples of how lot sizes and pips equate to profit or loss values. Example, 0.01 lots times $0.10 per pip, like you know, times 5 pips, the market moves, is 0.50, that's 50 cents profit or loss. All right, so you can take a screenshot of this table. So you can go over it later on. So 10 standard lots, 5,000 pip movements is going to give you 500K USD. Like, bro, that's some crazy amount of money there. And just so you know, 5,000 pips, you can catch it in 1 hour if there's news. It was on BTC USD, we did about 21,000 pips now on BTC USD for a sale some time ago. 21,000 pips, like bro. If you use the lowest lot size, 21,000 pips, oh yeah, someone should tell me in the chat box, how many profits would that be? 0.01 lot size times 21,000 pips. It's going to be what? 0.01 lot size times 21,000 pips. Judah Ayaba, I think you're the first person again. So I think that's that prize. You needed to get that prize. You needed to win that prize. So Judah Ayaba, please send a message also that you answer the question. Nice. Send a message that you answer the question, okay? We still have a lot of things to do today. We need to run. Now let's go to module 2. Metatrader 4 basics. Module 2, Metatrader 4 basics. Account margin. We're going to talk about account margin. But by the way, if you don't know what Metatrader 4 is, this is Metatrader 4 app here. Metatrader 4, Metatrader 5. So any of them works. And please, if you have the app, please always lock your apps. Please, it's important. Yeah, please always lock your apps, your important apps. I lock all my money apps. Metatrader 5, I didn't lock it. Why? Because I have a trade currently going on there. Once I'm done, I'll lock it. All your money apps, please lock them. And your websites too. On my Chrome, if I open my Chrome for you, you see that it's locked. The apps that are there. I'm sorry, the websites that are open there, you see that they are locked. So always lock your apps. It's important. So account margin. Margin refers to the amount of money that an individual must have in their broker account compared to or relative to the size of the trade. Size of the trade. Sorry. Where am I? Compared to the size of the trade order they can place. Okay, so margin is shown as a ratio, such as 1.20 or 1, like that's 1 to 20 or 1 to 100. And it's also called leverage in some brokers. Okay, so you hear some brokers telling you we offer 1 to 500 leverage. You know what they're telling you? Meaning your $1 is going to appear as $500 in the market. Why is that important? Because you're going to the market with $1 or you have only $100 in your account. Meanwhile, you're going to fight or play the game that people are playing. Meanwhile, those people that are playing the game, they have trillions of dollars in their accounts. Some of them billions, some of them millions, and you're going with $1. So broker will make your $500 that you are, or your $1,000. If you have only $1, broker will make it appear as $500. So if you have $1,000, how much will broker make it appear as? $50,000 in the market, and that sounds reasonable. Okay. So the first number refers to the amount of money required in your account balance relative to the amount of value of a financial instruments controlled in a trade. Okay, so margin can range from 1 to 500 for most brokers, but can be any amount allowed by a given broker. So I have a friend, one of my mentees, those that are on my personal mentorship group. That's my personal mentorship, West Creators. Those that are on that group, they understand something. I think there was a time that we called a trade out and someone took the trade. Or he has $46 in the account. At the end of the day, he was with 1,400 or something. Olushola Adeiza can testify. She's on the personal mentorship. Okay. Abayomi Agbaditu is on the personal mentorship. We can testify to that, right? So he's $46 turned to $1,400. Why? His broker was offering 1 to 3,000 leverage. Wow. Like 1 to 3,000 leverage. That can be good, but the backlash to it is if you lose all your money. Like broker will not help you safeguard anything. So that's how I advise people: use 1 to 100, 1 to 200, 1 to 300, 1 to 400, 1 to 500 at most. Don't go above that. Okay. Unless you're willing to lose all of your money, then you can go above it. If you're not willing to lose all of your money, then please stay with 1 to 100 to 1 to 500. Okay. So margin can range from that. Then the lower the margin ratio, the more money that is required in your account to trade at a given lot size. The higher the margin ratio, the less money that is required in your account to trade at a given lot size. You know, the margin ratio does not inherently increase or decrease risk in trading, but simply changes the account balance requirements for giving trade lot sizes or for giving lot sizes. I don't know. Do you understand what I'm saying? Right? Buying and selling the exchange rates. Now, this is where we need to draw some things. So buying and selling the exchange rate. Buying refers to placing a directional order with the expectation that the exchange rate price will go up in the future. With the expectation that the exchange rate price will go up in the future. What do I mean? An example will be this. So imagine this is the chart, right? And I'm buying here at this exchange rate. Buy. So I'm expecting that the exchange rates will go up in the future, right? So I'm buying here. We buy and sell the exchange rates. You don't buy a currency actually. No. You are buying the exchange rate of the currency and selling the exchange rate of the currency. Same thing here. Selling refers to placing a directional order with the expectation that the exchange rate price will go down in the future. Okay, will go down in the future. An example will be: imagine this is our chart. Sell. We're expecting price to do something like this. Okay. Yeah, basically that's it. So that's about buying or selling the exchange rates. Then price spread, very important to know that. So spread refers to the distance measured in pips between buy and sell order or buy and sell other price levels for a given financial instrument and a broker. Okay, so they won't buy and sell at the same price. Nobody buys and sells at the same price. So they want to sell high and buy low, but it must be within the present CMP. So your broker knows the current market price, right? So the CMP, they will now add some pips to it and say, okay, this is how much we are going to sell to you. So that's the amount we buy. Remember, they are buying high, they are buying low, selling high, right? So you from them, see, they are buying low, whether the market is high or not. They are going to buy low and sell to you high. What do I mean? Let me draw a graph so you understand. Imagine this is it now. Yeah? So this was what I was supposed to do, not this. Like the chart is running upside down now. So about this now. This is what the market is doing here. Right? If you are buying here, the spread, let's say this is 1.1112. Let's assume. They now added 10 pips as their spread difference. So they're adding 5 pips to the buy, 5 pips to the sell. So this is the current market price. But on your broker, you will still buy at 1211, and you still sell at 1.0. So let's minus 100 from 11, right? So 0.0912. So you see, this is their sell amount, sell offer, and this is their buy offer. It's called spread. Meanwhile, this is the current market price. They will never give you the current market price. It's a lie. It's a lie. Your broker will not give you that. However, that's why I told you about Green Wave X. So Green Wave X gives you very low spread compared to the ridiculous spread. Some brokers will give you 30 pips. Like, bro, 30 pips is a lot. 15 up, 15 down. That's a lot. So this is the current market price, but they will offer your buy at this amount and your sell at this amount. Same thing when the market is here. Let's say here now is 1.2112. So at that point, it will be showing buy at 1.2222 and sell at 2212 rather. And sell at 1.2112. That's 1912. So this is where you'll be selling. Sell, buy. The mistake many forex traders now make is that they enter trades without factoring spread. So if I want to set a pending order, I'm factoring spread. If I want to buy now, I'm also factoring spread. So I'm looking at my chart and I'm looking at my broker, right? So once I see it gets here, any amount it's showing me here. Sorry, hold on. Can you still see me? Please talk to me, sir. Can you still see me? Oh, yes, great. Thank you. Thank you. So many people now make a mistake by buying or selling without factoring spread. No. All right. You need to factor in the spread because your broker definitely has spread. All right. So that's something very important to take note of. So if you place a buy order, it will enter you at the broker's current buy price level, not the buy price you saw in your trading view, sir. No, sir. It is what the broker is offering to you. That's where you are going to buy from and sell from. Okay. So if you place a sell order, it will enter you at where the broker's current sell price level is. So you need to factor in the broker's spread in your trading. Do you understand what I'm saying? So the spread is part of how broker makes money on each trade. That's the truth. They need to make money. Like, bro, they help me. Do you know we are literally robbing those guys? Like, we are the ones robbing the brokers. I hope you know. Because I have taken a trade before and $10 account grew to okay, that guy that now grew $40-something to 1,600. Where does he think he's going to withdraw that money from? Broker now. Broker has to pay him. Like, bro. That's why I thank God for people that don't know how to trade. Because they're giving broker money that broker is going to give us. So it's good. Like, I think there's a fair balance in it. Right? So they need to go and learn how to trade so they can like collect instead of giving. Some people like giving broker money. It's good though. Maybe I'll even go open broker copy. But some brokerage firms are not profitable. That's why when you put some big amount of money, you're unable to withdraw. Why? Because some of them don't have like large social media following or large network of traders. Okay. So it is the charges a broker take from a trade or from a trader from a trader per transaction. In this example that I showed here, the spread in pips is 10. So we have a 10 pips. Oh, actually, the spread in pips is 1, not 10. In this particular thing I showed you here, the spread in pips is 1, not 10. Please take note. 1 pip. The spread in this one is 1 pip. Let me edit it. Sorry. So in this example I just showed you now, the spread in pips is 1, not 10, okay? Now, market execution. Please make sure you're downloading your Metatrader 4. Because I'm going to show you all of these things in your trading platform. All right. And for those that are leaving, like, good for them. Because I told you that there's record being taken into the class. So if you leave, bro, it's going to show you your certificates that you attend class and leaves early. I don't know. There'll be a report. The reason I'm doing certification for this particular program is so that those of you that know how to trade, but you're unable to apply for big companies to be their traders, right? So they can give you. Why? A company will not give you if you don't have a certificate, actually. 2 things that will make company give you money to trade, aside prop firms. Prop firms will give whether you have a certificate or not. But aside prop firms, big companies will give you money to trade for them if you have a certificate or you have track record. I don't have a trading certificate from nobody. I'm honest with you. I don't have any trading certificate, but I'm trading for company. Why? Because what? I have track record of trading success. You understand? So they will ask for 2 things. Either they will ask for certificates or track record. So if you don't have the track record, leverage on this and get a certificate for yourself. Amen. So a market execution order enters into a trade at the current buy or sell price level based upon your broker and your chosen financial instrument. This type of order is used when you want to enter a trade immediately. All or any other taking will enter you into the market now. Okay? And stop orders. Stop orders and limit order. So basically, stop order is a stop order is a conditional or pending order placed when you expect price to push through a given price level and you want to either buy or sell at that price level. Okay. A limit order is the conditional or pending order placed when the price is already in the direction you expect it to go and you want to enter if the price comes back to that level. Let me give an example so you can get what I'm saying now. So now, stop order. Imagine a buy stop. I want to set a trade. Buy stop. The market is going like this. I now set my buy stop here. I say price can break through this resistance, then we are sure price will keep going up. If it fails to break through this resistance, it might not go up. That's why I didn't enter here. I want it to enter here, but I don't know when it to break above because I want to go and eat food. Or I want to go and maybe I'm going to work. So I now set a buy stop order here. So it will enter me into a trade when the price breaks through this place. Then me, I'll now enter the trade here and be running with the trade. You understand? That's what it does. Sell stop does same thing. You say price breaks through this place, the likelihood that it keeps selling is high. So I set a sales order here. If price breaks through this place, let it enter me into the trade so I can keep riding with the trade. Do you understand? That's basically what it does. That's buy stop and sell stop. Okay. The next is a limit order. A limit order, very important. But let's talk about. Okay, yeah, a limit order. A limit order. Let's look at the limit order. So a limit order is a conditional or pending order placed when the price is already in the direction you expect it to go. I want to enter if the price comes back to a given price level. So this is when this one you are saying when it breaks above this place, enter for a buy. Limit order means you are buying here. You say price comes down here, enter me. I want to buy because I trust that when price gets here, to start bouncing up. So this one you are buying high. This one you are buying low. Strategies on how to do them, I will teach you. Remember that in the course, one of the course outline, especially in strategies, I think it's technical analysis or so, but one of the modules, I kept a particular curriculum there called buying high and buying low. Buying high, you are buying breakouts. Buying low, you are buying retracements, meaning price is going like this. But right now it's retracing to a point. Now say what? I want to buy it and continue the price. So buying low refers to retracement, one, or reversal. Sometimes the market is in a strong downtrend. Or if you see a good area on your higher time frame, I don't want to go into that now because this is not a technical analysis class. Maybe later in the week we're going to discuss that. But if you see a clear confirmation of the reversal, bro, please just take the step and catch the reversal. So you can either buy low, which is reversal or retracement, or buy high, which is breakout. Sorry, hold on. Yes. Do you understand what I'm saying? So basically, that's what it is. Buying high, you're buying breakouts. Buying low, you're buying retracements or reversals, either of them. Buying high, you're buying breakouts. Buying low, you're buying retracements or reversals. Now, selling high. Remember, I told you limit order is a conditional pending order placed when the price is already in the direction. So selling order means price is already selling, but it's retracing to a point where you want to enter for your own sale. So selling order means price is already doing like this. Now it's retracing. You want to sell here and join the price to go down. So this is where your sell limit is. Your buy stop, the price level is higher than the current market price. Right? Yes. Buy limits, the price level is lower than the current market price. Buy stop, if price goes like this, buy me in. Buy limit, if price comes down here, buy me in. Both of them means price will go up. But one, this is current market price. You say if price comes down here, I want to buy, or if price breaks above here, I still want to buy. Do you understand what I'm saying? So there's a strategy for doing any of those. Do you understand? There's a strategy for doing any of those. Let me come again with that because I actually like the way I was doing my illustration like that. So I want to come again with that explanation. All right, I just feel good doing that. So I said you can either buy high or you buy low. If you're buying high, you are buying breakouts, meaning there is a resistance. That if price breaks above that resistance, the likelihood of price going up is high. So you are buying high. If you are buying low, it means you are either trying to catch the reversal, and that reversal must be based on current price level on a higher time frame. Meaning, if you see a strong reversal area on the higher time frame, you're going to put your buy limits. You're trying to catch the reversal. If you are buying retracements, meaning price is already going up, you just want to enter, but you want to enter at least a little lower position so that you know as price is going up now. If you enter here, price might just reverse, so retrace and now go up. And you might even go up and reach that place where you bought from and go back, form double top. That is a good confirmation. I don't want to talk about that pattern. Double top when price does like this. Likelihood of price going down after you see something like this is high because you just saw M like going up, coming down, then M is for yourself. But I will not talk about that. You will learn that later on. All right. So basically that's what it is, basically. Okay. That's basically what it is. Stop loss and take profit orders. Your notes, please pick your notes. Stop loss and take profit order. A stop loss is a conditional stop order that automatically exits a trade a chosen price level, controlling the potential loss of a trade. As the name implies, it means stop my loss. I'm the one that formed that name anyways, but who cares? It means stop my loss. All right. So stop loss is a conditional stop order that automatically exits you from a trade if the trade is going opposite your direction. So it like saves you a hair of loss. All right. So stop order, as the name implies, it means stop my loss. A take profit order is a conditional stop order that automatically exits a trade if the price pushes through a level while the trade is in profit. So take profit means secure my bag. I've been able to get some profit, secure that profit. That's what take profit means. Stop loss means, please stop the loss. So you understand what I'm saying? So it's used to secure profit to avoid price returning to entry in your absence. That might go up, and then when you come back, you meet it down. But bro, you went up. Yes, you didn't set take profit, so you went up and came down. Like, for like, yeah. All right. I think I have to illustrate that also. So imagine I enter here. Right? Or no, I bought after this breakout. I bought after this breakout. Imagine, I bought here. This is my TP. Take profit. All right, means exit. Exit or TP. But I now said if price breaks through after buying after this breakout, I bought here, remember. And I say if price breaks through this support that it had here, which was resistance before. If price breaks through this place, it means that it will go down. So please exit me here, and I put my stop loss a little bit below that level. I put my stop loss here. SL, exit also. So either of them will take me out of the trade. If price goes to this place, I'll secure profits. Let's say, I don't know how much I'll put in this trade, but let's say I secure $30. Okay, my stop loss, let's say I'm willing to lose $3. All right. So right here we have a 1 to 10 risk to reward. All right. But I'm not yet to talk about risk to rewards. It's part of risk management, though. I'm not yet to talk about that. We'll talk about that later on. So that's what it means. Sell also. Imagine price is doing like this. I saw higher low, higher high, higher low, higher high, higher low. That confirms downtrend. And I enter when price retested this level, this previous low. I now sold here. And I said if price breaks above this higher low it had here, it will keep buying. So this is where I now get my SL exit. This is my stop loss here. Okay. Okay, it's not higher high, higher low, it's lower high, lower low. Thank you so much, Abayemi. So price kept on going down. Kept on going down, kept on going down, kept on going down. Price now went down to this place. Right? This is my take profits. Exit also. This is my exit. All right. So that way, whatever market does, I'm safe. If market goes up here, I'm willing to lose, let's say, $20. If market comes down here, I'm willing to lose, let's say, $200. I'm willing to get, let's say, $200. Let's not even go too far. Let's say I'm willing to get $60. So that's a 1, 2, 3 risk to reward, which is profitable. 1 to 3 risk to reward is profitable. All right, sorry, hold on. There's power outage. Just hold on. Let me put on the. Right, hold on, please. All right, so you're with me now, right? So whatever market does, I am profitable because I've secured profits and projected my loss. So people that say trading, you can lose all your money. I ask them, I say, that means you are indisciplined. Why? Because there's a stop loss position, which means you can save yourself. There's a take profits, which means you can avoid greed. Because sometimes market will break. Okay, let me show you one trade now. This one will bust your brain. Let me show you one trade. NZD-USD. Where is it? NZD-USD. See, it's still selling though. Ah, Jesus. NZD-USD. Play me that. See, I entered this trade. Look at this particular trade. I entered this trade when I saw this. This was where I entered. Previous strong bullish engulfing. So I entered at that point on the 4-hour time frame. I sold. This was my take profit. I thought market will reverse. What's market doing? It's still dropping. This was last week. If I still remained in this trade, do you know how much I'd have gotten? And I put, let me just bust your brain. I'll be honest with you. I put 5 standard lots. 5 standard lots. Let's calculate how many pips price gave me. 5 standard lots, 68 pips. That's reasonable, right? 5 standard, you can calculate how much was made. Now, so far we have made, this is 205 pips on 5 standard lots. Do you know what that would have been? 205 pips. Do you know what that would have been? NZD-USD. Do you know what that would have been? Right? So this is why many people don't sell take profits, because they're like, market can keep falling. But bro, what if it reversed? What if it's reversed? What if I left that trade open? Do you know what that would have been? But I was okay with the profit that I had made so far. So there's no need fighting it. What if it, and the guy is still dropping? It's not ready to reverse yet. I thought it would reverse. It's not ready to reverse. This strong close bullish engulfing pattern. If let's say it's still falling, like it's not ready to reverse anything. This is a trade that I took. It's not story. I took the trade. All right. So I just wanted to share that with you, right? That's stop loss and take profits. Then now we have other type synonyms. Most other types fall into 2 basic categories: either up prediction orders or down prediction orders, because there are only 2 things the market can do. The market cannot do anything aside them. Markets will either go up or go down, right? So why are you afraid to take a trade? It's either go up or go down. It's either take your money or give you money. So nothing more than that. Like, bro, why are you afraid? It's either take your money or give you money. It's either go up or go down. Your ability to determine when or to properly identify what the market will do is your edge in the market. Whether market will go up or go down, your ability to identify properly is your edge in the market. Okay, your ability to get that done is your edge. Sorry, hold on. Yeah, my battery. Okay, it's still full, sure. So we can still do something. Okay, great. I think I've explained that. Okay, no, we are not going to model 3 yet. Model 3 is trading view setup. But should we go to model 3 now? What's the time now? It's to 5. Before we do trading view setup, let's set up Metatrader 4. So who is in a quiet place? Who's in a quiet place? Who's in a quiet place? Who's in a quiet place? I need someone to share a screen. And you're using an Android. One person using Android, one person using iPhone. Anybody at all? You're using Android and you have downloaded Metatrader 4. Android, Sheifumi, great. So Sheifumi, I'll make you admin now. All right, so I'll make you a co-host. Let me stop sharing my screen. So you will share your own screen. All right, so Sheifumi is using Android. Sheifumi. I'm trying to make you co-host. Okay, I have to do this from here. Okay. Sheifumi, where are you? Where are you? Make co-hosts. Done. Sheifumi, I've made you co-host. Who's using iPhone? Someone using iPhone. One person using iPhone. Anybody? iPhone. Metatrader 5. No, not Metatrader 5. Metatrader 4, please. Metatrader 4. Someone using iPhone. Anybody? iPhone. Toyosi Adeyemi. iPhone, right? Yes. Okay. So I'll make you co-host. Where you are? Is it quiet? Where you are is quiet. Amazing. So I'll make you co-host now. So I've made both of you co-hosts. Let's start from the Android. So Sheifumi, please share your screen. You know how to share your screen now. So I've made you co-host. Just share your screen. Take us to Metatrader 4 and let's get the ball rolling. Maybe we'll do trading view setup another day, please, because it's quite late and I'm actually exhausted. I had a long day. I'm being honest. I had a very long day. So we might do trading view setup another day. As soon as I find on Sheifumi screen, is plenty. Okay. Okay. So now we are going to run through everything we discussed. Everything we discussed earlier, we're going to run through them. Everything we discussed. Please sign in. Demo account, no problem. But I'm seeing who goes way. It's not who goes way now. Hey, God. It's not who goes way. Click on add account, right? Click on plus. You're not going to use who goes way, please. Click on plus. You don't need to sign in. Just go back. Click that plus that is above. Okay, yeah. Log into an existing account or demo account. Click on open a demo account. Open a demo account, then find broker, search Greenwave X. Greenwave X. Greenwave. Then click search. Let's see. Oh Lord, we lift up your name. Lead us home. Metatrader 4 isn't responding. Close the app and open it again. That's how I wanted us to do Android first. Because Android really takes more time. On iPhone, it's so easy. Just one and you're done. Meanwhile, iPhone users, I think you can do the same thing or do similar thing. Click on manage accounts. Click back. Then click that plus sign. Open a demo account. Search for Greenwave X. Everybody using Android, please do the same thing. Search for Greenwave X. Then click that plus sign. Open a demo account. Search for Greenwave X. Everybody using Android, please do the same thing. Search for Greenwave X. Everybody using Android, please do the same thing. Everybody, Android, please do the same thing. GreenWaveX is showing now. Have you seen it? GreenWaveX Limited. GreenWaveX Limited. See it's there. Okay, great. So once you have opened your GreenWaveX demo on your MetaTrader 4, oh, I think the fault is from your phone. Maybe your phone is too heavy or something. I don't know. Deposits, reduce the amount. Don't pick $100,000. No, you can't. See, this is the psychology behind it. Any amount you are picking, let it be something that realistically you can actually fund. All right. So I advise you, if you don't know what it is, just pick the lowest amount there. Just pick the lowest amount. The lowest amount you see on your MetaTrader 4. That's 3,000 as lowest. Okay, great. So create account. Maybe you stop sharing your screen for now. You share it again later because they will send you your login details, and I don't want you to open it up here. So stop sharing your screen first, then complete the process. Anyways, the demo account, so there's no need to stop sharing your screen. You can open it, the demo. Please, there's no time. Let's see. Please, there's no time. Let's see. What do you say, Shay? Yes, please, you can stop sharing your screen now, please. You can stop sharing, please. Thank you so much. I appreciate it. So your C, please, on your share screen.
Thank you, Lord.
So your C.
Yes, coach. I'm trying to share.
All right. The video quality is so poor. Windows, they need to do better. Use my Windows to show my face. See how I'm looking. Okay, blade man. Please, I hope everybody's on the same page. Please, once you have done that, please let us know. Let us know. Onyinyechuku, have you done that? I've not heard your voice throughout. Emeka Abiyebuka, have you done that? Olukomo, have you done that? I've not heard your voice. Nothing. Oh, so you have opened the demo. Great. I hope everybody here have opened their account with GreenWaveX. All right. The reason is essential to open an account with GreenWaveX is because, like basically, bro, that's what I'm using, right? So we can be on the same page. I don't know. I think it's better to do that. So you have opened that. So first you see margin 0.00000. Ignore that thing. They're telling you the margin is 0 because you are not on trade currently. When you enter a trade now, you see the margin will change, all right? And whenever you are confused, go back to the definition I gave you of margin. What is margin? Go back to it. That will, so that you understand what margin is. Equity is before you enter the trade, or before you enter all the trades that are presently going on. Equity is what is fluctuating. Balance is what changes when you close the trade. Until you close the trade, it will not show your balance. The equity might be $1 billion. If your balance is $100 and you did not close the trade, it will go back and your balance will remain $100 with your equity. So unless you secure your profit by shifting your stop loss higher if you're buying, or shifting your stop loss lower if you are selling. So settings, click on settings, please. Android, please try to do the same thing I'm showing you. All right. So click on chart. Volumes, off volume, off the volume. You don't need that right now. Period separators. Well, you can still can't see green wave X. Oh wow. Please close your Metatrader phone, open it again, then search green wave X. The way she did it on her Android, you see it to come out, then fill in your details, open an account with them. They'll send you your login details. Please save your login details. That's how you used to log in. Unless you click on save password. If you don't click save password, then screenshot it and keep somewhere in your WhatsApp or somewhere in your notebook that you remember. Okay? Off your volume, trade level, you might want to leave that. Basically, the volume. Ask price line, you can leave it. Period separators, you can leave it. But period separators, I don't use it on unless on my trading view. So I think you can off it. You use it on trading view, not here. Then basically that's all. Go back. Then now click on chart. No, like click on chart now. Like no. Great. So now you see your chart is a clean chart. You can customize it and change the color if you want to. Anything at all. You can change the color if you want. Anything you want to do, feel free. It's yours. So just play around. So whenever you trade this code, now this is what you do. Click on quotes. So whenever you trade this code, if I call out a currency, GBP USD, and you don't find it here, what will you do? Click on plus. Search GBP USD. Click on that plus. Click on cancel. We are using demo. Yes, we are using the demo. So to practice now, you see spread is changing. Spread is 34. 3. Spread 20, 30. But this one spread is 1, 2, 3, 4, 5, 2, 4, 5, 2, 1, 3, 2. Spread changes per time because they need to make money as the price is going, depending on the volume in the market, right? So, but when there's low volume, spread usually increase on most brokers. I've not confirmed that for Blue Invest because I don't trade in the night. Yeah, I don't trade in the night. Unless I'm calling out the trade for somebody, but me personally, what am I looking for, right? So spread changes, but it's very low. Look at just 1 pip. 1 pip spread, 2 pip spread, 3 pip spread, 1 pip spread. CHF JPY, 2 pip spread, 13 pip spread, 14 pip spread. Why? Because JPY right now, they're in the night. They're still sleeping right now. Remember, JPY will wake up around like 11 p.m. 11 p.m., come back and check this thing. You see the spread have reduced to 1 or 2. This CHF JPY spread would have reduced. You see, it's already reduced instead of 6, 9, 7. Maybe some people are already waking up. So the more volume, lower the spread. Less volume, higher spread. CHF NOK, I don't trade it, so you can remove it. If you want to remove any currency pair, click on that pencil. When you click on pencil, just mark those ones you want to remove. CHF NOK, remove it. CHF card, remove it. CHF JPY, remove it. Card JPY, remove it. AEDNZD, remove it. Then click on that delete button. So anyone you want to add, you can start adding anything now. Go back. Go back, click the pencil again, then click that plus. Add any currency you want to. No, go back. Then click that plus, add any currency you want to add. Let's say you want to add BTC USD now, add it. Anything you want to add, feel free. Right? So anything you want to add, feel free. Add it. Anything else you want to add it. Add it. BTC spread generally, I don't advise anybody to trade BTC unless you know what you're doing, bro. Right? So if you don't know what you're doing, just ignore BTC because the spread is naturally high, like naturally high. Don't blame any broker for giving you 7,000, 3,000, 2,000, 6,000 spread. Some brokers, I was trading a broker and they were giving me spread 9,000, bro. 9,000 pips. Like how, bro? That's a lot of spread, right? You can add stocks if you want. Apple stocks, Netflix stocks, anything. Feel free, it's yours, right? It's yours. Meddle with it. It's a demo account, by the way. So do whatever you want to do with it, okay? So when a trade is called, click on GBP USD, for instance. Click on chart. Any currency you want to see in your chart, you click on it. If see clean W pattern, Jesus, I didn't buy. Wow. Anyways, if it breaks above, okay, everybody, now maybe we'll even call out this trade as a live trade. I've not done analysis, I've not done anything. This is a scalping trade. So for scalping, you don't need to look for analysis and anything. Scalping now, if GBP USD breaks above this other block we are seeing here, now if it breaks above 1.20380, click on buy. Once it breaks above 1.20380, happily click on buy. All right. Don't buy now, please. Don't buy now. Wait for it to exactly that line that she just drew now. So once it closes above that line, it must close above, not it touched it and came back down. No, it must close above it. Once the candle closes above it, then we are sure that buyers are in. Then buy. They'll take profits. Once you see any small profit, you can close it for now because we are just trying to scalp and see what's possible. And remember, how much in your account? 3,000. You want to risk something reasonable, right? Just reasonable lot size. Don't put crazy lot size. Reasonable lot size. Reasonable lot size. Let's say because it's a demo, say you can put 1.0. It's a demo, right? Put 1.0 lot size. Once you close above. If it doesn't close above, we are not buying. If you close above, you buy. You see the profit live and direct. You're going to see the profit. Why did I pick that pace? Because that's a higher high. If it breaks above, it means buyers are ready to keep pushing the price up. Okay? If it doesn't break above, then I'm not going to be interested. GBP USD exchange rate has been falling crazy. It was on 1.28. Now it's on 1.19. Okay, 1.20 now. Okay. So maybe this is the sign of reversal. Who knows? All right. But wait for it to break and close above. If it doesn't break and close above, then don't look at it. It must close above. If it doesn't close above, don't buy. If it closes above, then you can buy. Now click on go back to your quotes. When you get your quotes, click on GBP USD again. All right. Then when you click on GBP USD now, click on trade. I'm going to show you that buy limit, sell limits, and all those things we spoke about. Click on market execution. Now you see different things. Buy limits, sell limits. Buy limits means when market comes down to this place, buy me in. Sell and buy stop means when market pushes up above this place, buy me in. So that level I just marked out now. Click on buy stop first. Click on buy stop. Then that level we just called out now. What was it? 1.20380. Click on 1.20380. Yes. Our stop loss 20 pips, 1.20180. Take profit. Let's do 20 pips, take profit. Take profit 1.20580. Put on place. We bought at 0.01. So right now, when market pushes up to that place to buy us in, our stop loss is 20 pips. Our take profit is, how many pips take profit do we even put? Click on that order, that GBP USD order. Let's see. No, don't modify, just click on it. So click on it now. So our stop loss is actually 20 pips. Our take profit is also 20 pips. And not bad. Not bad. You can leave it like that. It's not bad. All right. So this is an example of how to set a buy stop order. So now how to set a buy limit order. Go to quote again. So when a trade is called, this is what we are going to be looking at. GBP USD trade. Now click on buy limit. Buy limit. All right. We are not going to place any trade now because I've not analyzed the market. But let's assume whichever price they call it, you put it there. Meaning when price pushes down to that place, buy me in. Stop loss 20 pips. Take profit, let's say 60 pips, 100 pips, depending. Okay. But we are not going to place any trade because like I didn't analyze the market. I've not analyzed the market right now. So there's really nothing to look at. Then same with sell limit, sell stop. Market execution means just enter me in now, whether buy or sell, whatever I put, enter me in now. That's what market execution is. Okay. So basically that's what it is. That's just what it is. Okay. Same with your Android. That's how it works on your Android device too. That's how it works on your iPhone, on your iPad, whatever it is, whatever device. That's how it works. It works the same way, just the same way. Okay. That's how it works. It works the same way. Now, trading view setup. This is it. I'm not going to teach on trading view setup. Why? Because I've taught it over and over again. Please stop sharing your screen. So I'll go to a video on YouTube that I've done on trading view setup. Everybody, that's our assignment. I told you after the class, we give assignment. So the assignment is go and watch the video and set your trading view using the video you have watched. Okay. So I'll share my screen now. If I don't find the video, I'll go to my Zoom recordings. I know I've done that class over and over and over again. So I'll go to my Zoom. And that's our assignment. Go and watch that video. Trading view setup. Go and watch it. How to set up a trading view. I've done that video over and over again. Okay, I don't think it's here. Let me go to my Zoom recordings. So I'll extract the file from my Zoom and I'll post it on my YouTube this evening. Okay? I'll post it on my YouTube this evening. So you go and watch that video. So I'm not going to teach on setting up your trading view. The only thing is tomorrow I'll just do a brief, like an overview. All right. So I'll do an overview for you tomorrow. Guys, please help me. I've been unable to validate my card because of my BVN. The number I use on my BVN. All right. I've misplaced the number, so I'm unable to like replace the card. Do you understand what I'm saying? They sent me verification code to that number for my BVN, but I stopped using the number, so I'm just like stuck. That's why I'm unable to like pay for this Zoom one thing like that. Recordings. Okay. This is 1.3 gig. I'll just open all these recordings one after another. One after another, I'll open them, and then I'll know the one that is trading view setup. But I know I've done trading view setup many times. So I'll open it. Once I open it and confirm, I'll send it out to my YouTube. I'll do that this evening, I promise you. So I'll do that, send it out to my YouTube. I'll share you the link by myself. I will not depend on my assistant now. I'll share you the link. So once I share it, assignment is to watch it. I remember repetition bets mastery. So watch it at least 3 to 5 times. And as you're watching it, set up your own trading view. Maybe on your laptop or on your phone, or preferably on your laptop, set up your own trading view. All right. It was a nice class, by the way. It was a very, 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 very nice class. So those of you asking what's my YouTube? My YouTube is David Atron. My YouTube is David Atron. Okay. My YouTube is David Atron. So this is my YouTube here. Just come here. Make sure you click on the subscribe button, right? Then watch all these videos, like watch everything. Honestly, those of you that want to trade HFX, come and watch it. Like it's simple, pretty easy. There's this particular video, HFS Bootcamp. Jesus, this video is fire. This video is fire. HFS Bootcamp. Those of you that want to trade HFX, this video, HFS Bootcamp, and this one, this HFS video, these two, they are fire, right? So watch them. How to avoid false breakouts. This one is for good forex traders, so watch this one too. But all of those, you watch them later, not now. You're still starting out, so I don't want to expose you to too much right now, right? But this is what everybody needs to watch today. It's 7 minutes, so you cannot tell me you don't have 7 minutes. Everybody needs to watch this today. I posted it 3 days ago. How to be a profitable trader. And I spoke about the key stages in your trading journey and how to go through all of those stages one after another. Then how to calculate lot size. This one was because of my students that were asking me, so I just did this one for my personal mentorship students, right? And I decided to share it out. So the live class with them, and I just shared it out. So people are getting like what people are paying for. Then boss your brain, you guys are paying $1,000, $2,000, $3,000 to learn this thing. I'm honest with you. I have a student that paid $3K. I have another student that paid $10K US dollars to learn, and you're getting it for free. So cherish it. Don't let you finish like stop you from learning a lot, right? So learn it. Where can we get all this video? On YouTube, bro. Look at YouTube. David Atron, just go to YouTube, subscribe to the channel, watch these videos, right? For your good, man. All right. So see you all tomorrow. Tomorrow we are gonna be earlier than today. Today we're a little late because I told you it was a long day, honestly. So I'm so sorry. See you tomorrow. I really look forward to helping everybody win. All right. Thank you. No, don't write thank you here. Write on the group so that those that did not attend will know that they missed out. So write the thank you on the group. All right. Bye. Have a blessed time. Let me stop recording.